Doubts are on the consumer inflation path have continued to dog these numbers. And of course, we've seen high oil prices recently, which have been pushing up the expectations once again for inflation. We've just seen some breaking news as well coming through from Rolls-Royce, suggesting that there's going to be 2,500 job losses there amongst white-collar workers, which amounts to around about 6% of the workforce. Take a look at what else is happening. Well, we got some numbers out across Europe today. Rio Tinto reported earlier it's up 1.5% on the Australian markets. Got production increasing across the board in the third quarter. Could be one of the stocks on the way up in today's session. Other companies reporting numbers out today, including Bellway. Not looking good for the house builder. And we continue to monitor what's going on in US earnings. We've got numbers out today in the banking sector from Bank of America, Goldman Sachs. Also got the pharmaceutical company Johnson & Johnson, all reporting before the market opens, all on all sessions on the IG platform. So look at volatility. We can see yesterday on the way down, and today we've got a little bit of a bite at 18.28, but to be honest with you, not an awful lot of move. If anything, we've got a little bit of pressure building on the European equity markets now. 76.22 is where the FTSE is expected now, which would be a drop on yesterday's cash close. But you can see we've been capped out by the 200-day moving average. Is that significant? Not necessarily, but I mean, it is a material fact that we've been finding it difficult to get beyond that. But I think if you look more at what's happening on the European markets, you get more of a sense potentially of the possible downside. And I'm looking here for a break of this line of support in the German DAX at 14,943. Now, by 15,231, we're up off the lows that we saw in the last couple of days or so. But again, looking potentially for a slightly weaker start to the German DAX today. But I think this step pattern that we've got, these retracements that we have, I think just really basically means that the market really wants to try and test this line of support at 14,943. Get a break of that, you're then on the way down to 14,458. If you are short on these markets, stock goes above recent price action. Same sort of thing in France. I think if anything, we're closer to this line of support at 69.46, where you can see we're currently trading 13 points above the 7,000 level. Again, looking as though we could well end up seeing a lower start to the trading day today when things get underway. At the top of the hour, let's go what's been happening in the Asia Pacific markets, where we've seen gains across many of the markets there. And in fact, I can't really see, you can see here the three major benchmarks showing gains across the board. I can't really see any other markets where we got any negative activity. Singapore up, the Nifty 50 in India up, the Indonesian markets up, Filipino markets up, Nikkei 1% up on the session in today's trade. Gains on the Hang Seng, gains on the S&P ASX 200. We've seen the RBA minutes out today. We'll get some more details on that in just a minute, but broadly speaking, good excuses why we're seeing Australian interest rates kept at 4.1%. As I say, more details on that in just a few moments' time. It wasn't just gains across the Asia Pacific markets we've seen, but gains yesterday on Wall Street as well for all the major benchmarks. Let's take a snapshot of what we saw there. A rise of around about 1% on the Dow, just beating that a little bit on the S&P 500. Nasdaq Composite up 1.2% in the trading day in yesterday's session. Let's look at where we are on the 24-hour markets. Today's opening, pretty much the top of yesterday's candle, 15,144. So that's where things are looking at the moment. I don't think the pattern here is the same sort of rolling over that we've got in the European equity markets. I think Europe is going to be a little bit more difficult to persuade traders to take an upward position. That being said, look at this. Just looking at this line here I've just drawn in here, capping out the gains. We continue to see lower highs, but we've got higher lows as well on the Nasdaq. So far as the S&P 500 is concerned, I think there's more reason to potentially see some more downside. We were talking about this in Beat the Street last week, where we were talking about this area of resistance between 43.94 and 44.40, and the market's clearly finding it difficult to get beyond there. It was a good day yesterday, broadly speaking, as we've just seen on the markets, 1% plus rise on the S&P 500. And again, like the Nasdaq, we're holding on to that on the 24-hour markets in the session in today's trade. But I think if this cap holds the 61.8% retracement, it's more than likely we'll see a testing at the 4,200 level, the lows that we saw back on the 4th of October. So that's where things are there at the moment. as we look at what's happening on Wall Street. But I do want to catch up with what's going on the economic side, because the Reserve Bank of Australia has released the minutes of its last meeting, and it's concerned that inflation is not slowing as hoped, according to these minutes we got out. But at the same time, considers there was not enough new inflation data to warrant an interest rate rise. What I want to do is to take a look at what's happening with the Australian dollar, because this is going to be key, obviously. We've got the US dollar now hesitating in the direction of travel. Let's take a look at what's happening in Aussie. If we look at the chart here, you can see in the last couple of days we've broken the 6,300 level, but we haven't really seen a concerted effort to go beyond below that. Today, for a second day in a row, we're up for the Aussie against the US dollar. Markets currently implying only a 16% chance of an interest rate hike in November from the Australian Central Bank, but that would increase should inflation surprise on the high side. Staying on the charts, just wanted to update you as well on what's happening with the Aussie trading against the Kiwi. Now, this is the Kiwi down for a fifth day in a row. And this has been a concerted effort on the way down. In other words, the Australian dollar up against the Kiwi. Now, I want to keep this chart up because I want to talk about this move here in the Kiwi on the way down. New Zealand inflation rate in the 3 months to September fell to 5.6%, a two-year low from 6% in the second quarter. Now, economists had expected a 5.9% move, while the Reserve Bank had forecast 6%. Consumer prices in September rose 1.8% from the 3 months earlier, less than the 1.9% median estimate. I think it's a reason here to sell the Kiwi. If you're short on this at 92.83, you're pretty much the bottom of the candle. Stock goes above the 93 level with a view to moving somewhere down to this area down here where I've got this line. Let's just draw a new line on there as well to take us down to there. So anywhere between 91.80 and 91.59 is an area of support, I think, potentially to watch out for. So that's what's happening there with the Kiwi. Staying on the charts again, just wanted to update you on what's happening with sterling. This is sterling against the euro. I'll show you what's going on in the 10-minute candle chart. Excuse me, because we've just seen some release of UK unemployment numbers this morning. It wasn't released in terms of the unemployment rate, but we still got wage growth, excluding bonuses, average hourly earnings rising 7.8% year on year, in line with expectations. This is marginally down from the 7.9% rise last month, but still very high, and raises questions on whether the UK government inflation target of 5% by year end will be reached. Of course, the 2% target is the Bank of England's base rate target. And you can see we're building on the short positions here for sterling against the euro as we speak. Let's just quickly update you as well on what's happening with sterling against the US dollar, which is the main cross. But of course, this has been skewed by what's happening. These are 10-minute candles as well. You can see the Maribuzu candle in the last 10 minutes is showing emphatically that people are trading sterling lower at the moment, down at 121.73. Just want to correct this down into one-day candles just to show you where we are in the grand scheme of things. Nothing like the move that we saw up yesterday for sterling against the US dollar. That move was really all about the weakness in the US dollar rather than strength in sterling. But today you can quite clearly see for those 10-minute candles how we're trading this market down for sterling there at the moment. Let's take a look at what's to come in the European equity markets. On the economy, we've got German ZEW due out this morning at, I think it's 9 o'clock today. It's expected to rise, still to a negative figure, but a -9 in October after a -11.4 in the month of September. So that's the ZEW economic sentiment out a little bit later on there this morning. Over in the US, some macroeconomic indicators to watch out for today at 1:30. We've got retail sales expected to rise by a margin of 0.3% in September month on month. Industrial production forecast to stay unchanged in September. Business inventory is seen increasing by a margin of 0.3% in the month of August. All this adds up to a potential trade for the euro against sterling, against the US dollar, I beg your pardon, the major cross. If we do get some weakness in these numbers out today, I suspect we could well see a little bit of a reversal of what we've seen so far today, which is a pullback in the euro against the US dollar. But the grand scheme of things, it's all about whether or not the Fed's going to raise interest rates at its next meeting. I was looking at some information on the Daily FX website overnight, and there's now suggesting there's only a 30% chance, I think it is 20% chance of an interest rate rise from the Fed come the meeting at the beginning of November. Now let's move on to some of the corporate news headlines. One of the stock movers I suspect we could well see at the beginning of today's trade could well be Rolls-Royce. Now, Rolls-Royce is an interesting stock in as much as recently we've seen it move on expectations that the company could well be one of the front leaders in some of these small businesses that's starting to bring us small nuclear reactors for local consumption. I wanted to look at what's going on. Rolls-Royce, these are one-day candles for Rolls-Royce. We're going to open at 213.2. There were reports earlier today, which have now been confirmed by Rolls-Royce, that they're going to shed 6% of the workforce, almost all white-collar workers. That's 2,500 people. I think between 2,000 and 2,500 people was quoted by the company just a short while ago. So that's confirmed what we've been hearing. Now, Rolls-Royce has seen a substantial increase in shares since the lows that we had back in, what was that, September last year, 258% up on hopes that the new chief executive, through the moves that he's trying to do and trying to help the company. And he says he wants to increase shareholder returns substantially. And this is one of the ways of doing it. 6% of the workforce, 42,000 people working there, up to 2,500 white-collar jobs going at the company. That could result in a little bit of a climb for the stock. If you're up on a long trade at 213.2, stock goes below the 2.5 area, which will give you some protection in case there is a pullback. But I suspect this could well be a positive stock story at the start of today's session. Rio Tinto stock up around about 1.5% on the Australian markets in the session in today's trade, an increase in its production report coming through this morning, which has been positive for the stock. Iron ore shipments at the company rising 1.2% in the third quarter as it ramped up production at the Gudai-Darri mine. It shipped 83.9 million tons of iron ore from Pilbara, compared with 82.9 million in the same period this time last year. Rio maintaining its full-year expectations for Pilbara shipments in the upper half of 320 to 335 million ton range. Copper output increased by 5%, aluminium output rising by 9%. I want to show you a chart for Rio Tinto. Now, this is the stock in London, and we're expecting something like around about a 1.5% gain at the start, 1.25% gain. 52.17 is where we're opening, so it could well be capped out on the 200-day moving average. You can see these two little bubbles I've drawn on here were where we failed to get above the 200-day moving average. We did pass intraday, but then failed to close above that. So that may be a little bit of a headwind. Opening at 52.17, so potentially some difficulties in getting through the 200-day moving average, which strikes in at 53.23. Watch out for Bellway at the open. This is one of the house builders here in the UK. It's finding the going tough. Oh boy, some of these numbers, if you drill down, you can see some of the interesting figures coming through for the company. A group says that customer demand continues to be affected by mortgage affordability constraints. Reservation rates reduced by 28.4%. Now, this announcement at Bellway reports ahead of its full year earnings number. Underlying pre-tax profit is down 18%. These are underlying full year figures, actually, to £532.6 million. Revenue marginally better than expected at 3.4 billion. But Bellway warns that given the reduction of its order book and lower reservation rates, there will be a material reduction in volume output this year. And in fact, I was just looking through the numbers a short while ago. I think I saw something like around about a 200 basis point cut in its margin, which would be substantial. Yesterday, we saw the fourth day in a row of losses for the stock. Look at this. It closed yesterday at 21.72. If you have a position on this, I'm wondering whether perhaps maybe we could well get a break of that. Is an area to watch out for. But then possibly, depending on how much of a loss we end up getting, we're opening at 21.72. This is an area of support down here at 19.96. As I say, I don't like the look and shape of these numbers out from Bellway. It is doing all it can to mitigate the downside, but it is having to face increases in costs for wages, increasing costs for building materials right the way across the board, although they have come off for wood, for copper, for steel, for electrical items, all these things that you put into a new build. Plus the fact that we are now hearing as well that in some parts of the country, local authorities are insisting that things like heat pumps go in now to some of these companies, some of these properties, which is not what people want to see. They have a lot of negative press around heat pumps. And we are in an interesting situation for these house builders. So potentially downside to come at 21.72, looking for a possible loss at the start of today's trade, at the beginning of the session for that company. Staying on the charts, this is moneysupermarket.com. Trading statement up this morning. Pretty much up across the board in terms of the big picture. 3-month numbers up 14%, 9-month reported figures with revenues up 12%. The company says it's got a big rise in insurance and travel. A lot of people coming back into the travel, into the business of travel for holidays and so forth. But there's declines in money. Home services, particularly, which surprises me, and cashback. Home services seeing continued softness in broadband switching, partially offset, but not fully, by strong growth in mobile switching. The company says we continue to see no material switching in energy. Now, this is key for me because remember, a couple of years ago, people switching all the time because they're trying to get lower rates. Now, of course, those lower rates have been wiped out and they just don't know where rates are going. So people are hesitating. They're staying with their supplier. I know that's the case for me, and I'm keeping with my supplier because it's pointless changing in such a febrile environment. The stock was up yesterday by a margin of 1.74%. Ahead of these numbers, it'll open at 245.8. Interesting to see where that stock goes at the start of today's trade. Now, talking about earnings, let's just quickly wrap up what's happening in the States after JP Morgan Chase, after Citigroup and Wells Fargo on Friday. The rest of the US major banks reporting before the market opens today. Let's take a quick look at the figures. Bank of America, all sessions on the IG platform, forecast to post earnings of 82 cents a share in Q3, down 1% on the same quarter this time last year. Revenue expected to reach something like around about 25.16 billion. Investors will also be attentive to loan loss provisions, forecast to have risen by 13% in the period. Street also expects Goldman Sachs third quarter estimates there 613 on revenues of 11.45 billion. Also before the opening bell, Johnson & Johnson is coming out with numbers as well. The healthcare giant is expected to post a year-on-year drop in earnings and revenue. Earnings are seen falling 1.3% to $2.51 a share. Revenue anticipated to reach just over $21 billion, down from $23.75 billion this time last year. Coronavirus cases and deaths continue on the downside. That's good news. But in terms of money moving around Johnson & Johnson, J&J, it's not so good for the figures. This report will be the first completion of the spin-off of its consumer health business, now called Kenvue. So watching ahead of that. Let me just quickly run through some of these charts. Let me go for Goldman Sachs first of all. Goldman Sachs yesterday on the way up. Excuse me. If we can have a look at the chart on this, 31430. The stock was up in yesterday's session. All sessions it'll open at 9 o'clock this morning at Goldman Sachs when trade gets underway there. BAC is the ticker for Bank of America, up in yesterday's trade by a margin of 1.14. Again, this is another stock worth watching. All sessions on the IG platform. And Johnson & Johnson, just to take a look at what's happening there, because the stock, another all sessions share, was up yesterday by a margin of 0.9% at 157.99. Again, an all session stock to watch at the beginning of today's trade. Other reports today include United Airlines, Lockheed Martin, Omnicom, and another banking stock, BNY Mellon. You'll find that under the ticker BK, but if you look at it for the full name, it's Bank of New York Mellon, if you're looking at finding a ticker for that on the IG platform. Let me just return to a chart worth looking at. I want to bring up a chart of Bitcoin because this is on the move in yesterday's session. Look at the big wide move that we had. In fact, it was quite volatile. One off the lows, one off the highs, I beg your pardon, yesterday, starting at the lows. The high was just a shade below the 30,000 level. Volatile in extreme as cryptocurrency news platform Cointelegraph reported that the iShares Bitcoin ETF, owned by BlackRock Group, had been approved. Now, the news saw Bitcoin spike to a session high while simultaneously dragging the crypto market as a whole with it. Let me just show you what happened with the likes of Coinbase, which was on the move as a result of this. All sessions, we saw that up and then had to pull back. BlackRock had to issue a report saying the ETF application is still under review. by the SEC. So that was why so much move was seen in that market yesterday. Staying on the charts, just wanted to wrap up a couple of other areas. Wanted to catch in with what's going on with oil, down for a second day in a row, but nothing like yet the move that we've seen there on the way up on Friday. So it's just a small retracement of what's going on there. I think, if anything, more interesting for gold. Now, I've drawn here what looks to me like the development of a pennant. A pennant is a continuation pattern. Generally speaking, these things, when you move up, this is the pennant sort of, or flag, if you like, sort of flagpole pennant type thing. You measure the height of the post before you go into this little pennant flag. It normally has to have 3 touches on the upside, 3 touches on this side up here, which technically speaking it hasn't yet got on the line of support. But nonetheless, it looks like potentially it is developing. If this does develop, as a pennant normally does develop, you measure the height of this post here and you get the projection, which will take us up to 1990 as a possible price target for the price of gold. That's it from me. Back at 10:30, we're charting the markets, and I'll be back a little bit later on with some of the individual movers on the markets, like Rolls-Royce, which I consider could well be an upside stock in today's session. Downside could well be Bellway. We'll take a look at that as well a little bit later on if you check in with the IG platform and some of the IGTV videos we're publishing later on this morning. But we're back with charting the markets at 10:30.